Hi there, keen traders. This is Currency Watch. We're having a special edition before the FOMC and the tapering decision just to see exactly what we have, and we'll go over all the stacking setups, Great Britain odd, and we'll look at the rest of the majors. Unfortunately, I will be unavailable in the morning tomorrow, for I have to go to a funeral. I just found out I need to travel this afternoon. And for most of the day tomorrow, I'll be traveling back. But I will still be trading and sending out tweets with my trade setups and so forth. I can do most of this actually mobilely if I had to. Let's take a look, though, right now at the Great Britain USD. We'll start this off. You can see that the pair still in the support zone between 166 and 166.50, and the bottom is at 163.10 and 162.50. And until the pair breaks out of this range, there's really nothing to do. This pair has been basically a non-event since the beginning of December, and trading these moves to the top and bottom would be very difficult at best. That was a nice move there, but we can see a spike down. It could buy here at the 50 fib pullback, which I think I was flirting with the idea of buying at 65.90, looking for a pushback down. If anybody wants to do that, I'm sure you'll have opportunities with that. We'll probably have a little bit of chop today ahead of the FOMC decision. Sorry about the volume actually, but I didn't anticipate working at home this morning, so all my microphones and so forth are at the office. You can see though that the cross right here, we have the ascending trend line that could add support, so we'll have to wait for the decision. If we find a decision that for some reason that they decided to hold on tapering this month, we'll probably most likely a push above this zone, the 166.50. The momentum is definitely higher in this pair. You can see that we have created higher highs and lower lows, and have just slowly been creeping higher since what you can see around November 10th. We had the break of the range to the top side. If we have it pushed down lower, if we get a break of 165, then we could see support moving in. We'll have to see how the candle is going to play out on the daily, and then try to stack into it most likely, depending on what exactly happens. And I will talk about that when I do an update later. Update this evening, or I send out the trade recommendations. The EURUSD, same thing. You can see that, no, actually it's actually the opposite. This pair is moving lower. You can see, you can pretty clearly, if you wanted to, make a channel here on this downward move, and it probably looks pretty symmetric. And what we have here is that the pair is sort of chopping though between the 137.40 level and the 135 level, and until we get out of these chop zones, there's just nothing to do, because there's no way to take advantage of these moves, because they're they're not linear. I mean, when the stacking trades were working best, you can see we were having moves, move higher, move lower, higher, lower. When we get slow sideways chop like this, that's a death zone right there. And that's basically what we're in right now, a slow sideways chop, and it won't last forever. It's just it's annoying that it's taking so long. So basically, what we're looking for is a break of this 135 or a break of the 137.40 level, and then we're going to look for some momentum to stack into. If we get a long enough candle, we could stack into that. But similar to the Great Britain pound, both these pairs are at their 50 fibs. I mean, this is definitely a chance if you wanted to buy it, looking to go long. But I can tell you right here now, you're going to lose on one of these trades. I would more so just wait for the news to come out. Swiss franc, nice balance off the ascending trend line that we spoke about. Right now, right here, we're looking for a break in the 91.50 level, or if we get a nice enough candle in here, actually, we could jump into that, because that's a lot of space, especially for this pair, or a break of this ascending trend line, and that'll give us a good opportunity. Now, let's go through the Great Britain odd, because the Great Britain odd was the trade last night. You can see that this pair was in an ascending wedge. We had the entry right about here yesterday at 88.85, at least that's when I entered, 188.85. Nice candle there. I was pretty optimistic about that, and we had a push down last night all the way to 87.87, and you can see that was the support zone, and the pair has reversed today, closed out break even. Technically, I shouldn't have moved the pair to break even, but I mean, we moved almost 100 pips, so I was willing to see what the low was there. I was willing to move the trade to break even. Could have even closed it out, but I chose not to. I was hoping we'd get a breakdown towards the 87.50 level. You can see that now the pair is back above this trend. To get into the cross now, the levels we're going to be watching is for a break of the 89.60 level, let's say. Here, I'll throw the trend lines up here. The 89.60 level, you can see that, that's pretty clear. Or to the downside, the 87.80 level. We need those levels to break to get the momentum to go one way or the other in the short term, and that's how we'll do it. But like, once again, the trading has been spectacular this month, and break-even trades not that bad of a deal. New Zealand USD, we still know that this pair is in this consolidation zone. It is in a wedge, or maybe it broke out of the wedge. Let's take a look on the 4-hour. Nope, the wedge still riding the wedge. You can see if we go down like this, and we put it across here, we need to make a straight line. We have a wedge, and the pair has rejected the wedge pretty nicely. And once again here on the chart, we had to push up to the zone at 83. Now we're back down to 82.50. We need to break this wedge on either side to really get things going in this cross. And until we get that, we could easily see a continuation of the consolidation, but more likely I would expect to move with the tapering decision. Now the USDJPY has been moving, the yen has been moving lockstep with the S&P and interest rate yields. You can see I guess it has a new resistance zone around this 103.50 level. But until we break the 101.60 or 105, well, 101.60 more specifically, we're not going to find much momentum to the downside. And we have to think what would be the reaction to a tapering decision if the Fed continues to take money off the table. That should make interest rates, yields go up and prices go down, and that would in theory make the dollar investments become more attractive, and the yen would go up, but the S&P would go down. So that's an inverse relationship. And if the S&P goes down, you can see that this pair has been following those trades. The S&P moves down also. So it's an interesting setup that we have right here, and we'll have to see what the price action gets. But if we get a push lower, it could be an opportunity to go in long for a push higher, down towards the 50 fib, which would be, where are we going to run the fib from? That's a good question. Would be around the 101 level. And so you can already see we have support there at the 101.60 level. So the 101 level would be what I would be watching. The EURUSD, you can see this thing has broken trend line resistance. We are just going down, following the yen lower. Next level of major level of support is at the 138.50. We'll just have to watch that. You can see it's been a very choppy ascent. And the Great Britain, this is just following the Great Britain's lead and being chopped all over the place. Aussie, now this is the guy that is pretty compelling to me because it is not doing much of anything. You can see it's slowly moving lower, and it broke below the 88.20. We came up and tagged the 88.20, and now we're back down to 87.38. Nice move today, actually, in the price action. You can see the 88.20 was obviously the spot, and a lot of people jumped into that right there. Now, if we can get a break, though, of this 86.60 level, then the next down push is lower. And I have documented many times before that the fib move for push lower would probably be the 83 level, which would be the 0.272, or maybe even the 80 level, which would be a larger extension. But there has been chatter that that's where the central bank would like the pair to move to. All right, everybody, good luck trading. I will definitely be in contact and posting all trades, so no worries. All right, everybody, good luck trading, and I will talk to you soon.